Yes. What's going on? Fade out. Can't just cut it. Man, always remember, whatever you think about comes about. Whatever you focus on grows. It expands. So we gather here on Sunday. I try to come in at 9, but I had some technical difficulties. Sometimes the internet is difficult. Sometimes you reboot a computer and all of a sudden there's no sound, there's no video. You got to go turn shit on. Stuff rubs against you. It does that in the stock market too. Things maybe it's our fault, maybe it's somebody else's fault, but things happen. This here is the visual view of price of the stock of AT&T. Now it's kind of moved picture perfect for the money flow. You say, what's the money flow? Money flow is just a generic term that I came up. There's actually an indicator called the money flow. I didn't even know that when I was calling it the money flow. And there's actually an indicator. You can come over here and click on, it's called the money flow. And for me, it was just this movement of price. And, that's it in its simplest, elementary drawing, was a way that price tend to move. Now, when I first started looking at, maybe you don't see it. Maybe I'm crazy. I don't know. I'm just sharing what I see. Science of Getting Rich in Chapter 2 says there's a science of getting rich, and it's an exact science like algebra or arithmetic. There are certain laws that govern the process of acquiring riches. Once these laws are learned and obeyed by any man or woman, he or she will get rich with mathematical certainty. So it says there's a formula. That if you do things in certain ways. Now, that's not necessarily applying to this. But what I'm saying about, for me, the money flows, I began to look at things and try to apply it from as strict a philosophy as I possibly could to keep me on track, keep me online, like to give me some sort sense of order out of what appeared to be chaos. The price is chaotic, man, where a stock opens. Now, you'll notice my charts are in bars. Yours are probably in candlesticks. You say, well, I like candlesticks. Man, I got candlesticks tattooed on me. You don't like them more than me. I got these tattooed on me. Nobody likes these more than me. Price. A guy asked me, what's your prized possession? I said, And a guy asked me this at a bar. And that's an interesting question. What is the price? I assume you're talking about some shit you can buy and a thing. He's like, yeah. I said, probably charts, man. Not the answer they were looking for. Thought I might say a car, maybe a beach house, a second home, your property, a guitar, whatever you're into. And I was like, no, charts, man. These have been with me most of my life. This pattern, this watching shit. Now, I'm not saying I knew what it was doing, but me looking at these things, me looking at the price of AT&T all the time. And if you see this is just a basic representation of the movement of price, of what we call the 4 stages of what ultimately I started to call the money flow, was that price would do one thing and then start to do another, and then it would keep doing the other until it stopped, and then it would start doing another, and then it would do that one. And I didn't know how far or how high or how low or whatever, because there's all these things coming at me every day. And one day, and I took all these courses and read all these books and did all these different types of shit. And one day I'm sitting at a blackjack table, and as I sit there, and I'm noticing that the cards come around, there's a proper way to play the game. There's a time to hit, and there's a time to to not. And there's a time to double your bet, and there's a time to not. And there's chances where you're most likely to win, and there's times where statistically, you're probably going to lose. And as I'm sitting there, I'm thinking, I'm like, what that really does is it adds order. So if you sit down at a game and you don't understand the rules, you're playing spades, you're playing whatever, cribbage, shit, it could be checkers or chess. You're playing anything and you don't understand the rules. And that could be what? Maybe that's selling cars. That's a game, right? You got to understand the rules. And there's a pattern and there's a process for accomplishing in your world. Maybe it's this world. Or maybe it's not. Maybe it's bigger than that. Maybe this helps you get to the idea of like, how do I sell more houses? How do I produce more units? How do I perform better at my job, right? Maybe it goes deeper than that. Like, that's what this is talking about. In chapter 2, there's a science. Meaning he says there's a better way. There's a better way to do almost everything, man. Like there's a way that if you do it, yeah, sure, you could go out and come up with something completely new, brand new. Yeah, do that. But there's also repetitive. You can copy what's already been done. That's the game of real estate, right? What is it? It's certain rules. Like today I did that video and I said, hey, there's 4 ways you make money in real estate. That's a rule. Like it doesn't, once you learn it, once you see, oh, that's how that game is played, I get it. They acquire, right? There's rules to that. They're basic. And as you break it down into its component parts, all of a sudden you've added what? Order to what is perceived to be chaos. Yesterday I'm working on a porch. And if you look at it, I don't know if you guys ever see some of those pictures I post. If I'm looking at a piece, I need to see the component parts. What is this? What is this? What is this? How is this connected? Because once we see that, we can deconstruct it. So this idea of price moving in 4 stages can just be deconstructed. Meaning when price tops out, it looks the same. When price bottoms out, it looks the same. When price breaks out, it looks the same. So now I'm just going about what? Identifying a pattern or maybe a process. There's a science. To get it rich, it's an exact science like algebra, arithmetic. There's certain laws that are governed by the process of acquiring riches, and that once these laws are learned and obeyed by any man or woman, he or she can get rich with mathematical certainty. And we can look at something like the S&P 500, not to lose T, but look at the S&P 500, right? It's going down right now. It's going down right now. But if we back it up to where each one of these bars is 1 day or 1 month, what do we see with the stock market of recent? Each one of these is 1 month, 20 trading days, right? 20 days of trading. Now, is it any surprise we would come down? No, I mean, we were banging the RSI. Now, I'm jumping ahead. I'm assuming you know what the RSI is. RSI is an indicator. It's an indicator. What does that mean? Indicate. What is the yellow light? Indicator, light's about to turn red. It's letting you know. Blinker. A blinker is an indicator. Look, that car in front of me is probably about to go left. And you say, why? They turn their blinker on to the left. So that's an indicator. That's what these are, man. So as you learned, when you begin to look at charts, this is the RSI, Relative Strength Index. It's an indicator. And when this thing goes, on my chart, it shows it as green. You could change the colors down here. So if you have my course on getting started with stock charts, that's what we're talking about. We're digging into this, man. Right? So you know all about this right here. You know how to read this. This is an indicator. Hello, flashing. And when it goes red, what is that telling you? Price has gone too high. That's what it means. In a relative period of time. And you go, what do you mean? Meaning price moves in periods, man. Price will move sideways for a while, right? And then it'll run up for a while. And then it'll drift sideways for a while. And then it'll come down for a while. And really? You don't think so? Go look. Go look at charts, man. Go look at it. So I wrote this years ago. And look how this moves. So if I know that, and I want to own this for the rest of my life, and this thing pays me a dividend, and I'm like, hey, when this thing's overpriced, maybe I want to sell some. Why? Buy something else. Go on a vacation. buy me a cool watch and buy a little bling, get a big fat necklace, like one of those big 80s wrap necklaces. Maybe I'll buy one of those, right? Or maybe I'll buy shares of, I don't know, another stock that has a higher dividend that's gone the other way. So I want to buy stocks like down here, sell them like up here. Now this is perfect target. I'm looking backwards, right? And then down here, and then what? Maybe sell some up here. If that was my game plan, maybe I don't want to sell. But at the same time, maybe I don't want to buy when it's like this. So by the very nature, if I can read patterns, if I can walk outside and see it's cloudy and think, fuck, might rain, that's an indicator. Does that mean it's definitely going to rain? No, not where I live. It could look like it's about to pour down and then not all day long, right? All of a sudden you can just feel it. Wind comes in, shit gets, like you can feel it. What is that? Indicator. So your life is filled with indicators. These aren't complicated. This one's just called relative strength index. What this indicator up here at the top does, and this is one of the 6 indicators of the money flow. So the money flow is really summarized on a single page, but it's a lot involved in that one page. Number 4 of the 6 things I'm looking at, relative strength index. It's set to 14 days. What it's measuring is the moves inside of a stage 2, a 3, a 4, or a 1. It's stocks in one of those. Based on these 6 things, we can determine it's in one of those 4 stages, right? That doesn't mean you know the future or where it's going next, but you could set a pattern of trying to buy in certain stages and maybe what? Trim or sell in other stages, right? All depends on how you're looking at time and what your purpose is. And you say, does this, okay, that works on a daily chart, but what about a 5-minute chart? Yeah, it's fractal, man. Fractals are never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are recreated by repeating a simple process over and over again on an ongoing feedback loop, driven by recursion. You know what that word means? Instagram? I doubt it. I doubt any of you know what it means. Let's see. You should look that up, though. Infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems. The pictures of chaos. Pictures of chaos. Pictures of chaos. This is a picture of chaos. It's the price of AT&T. It's chaos. You know, this shit can change prices based on Vladimir Putin. This could change positions based on an election, based on company fraud, bad sales. Every day, millions of things could come in here and fuck with this. Now, here's what I've noticed. And this is what I figured out. Sitting at that blackjack table as I played, that I'd read all these books, looked at all this stuff. The one thing I knew, nobody knew shit. That's a cardinal rule, general rule. Nobody knows shit. Okay. Now we got some people smarter than other people, so we could listen to things. But at the end of the day, when price is breaking out, it always looks the same. Looks like that right there. Green, the price takes off in an aggressive fashion. So the candlestick itself, the bar itself is aggressive. It's an attacking movement, meaning it's closing near the top. It rockets up. You can't miss it. You can't miss it, man. And what does that do? That triggers that the change in price is underway. So as price came down and started to go sideways, and we have rules for determining sideways, we moved to this side. As it moved sideways, some people began accumulating in stock. And as more people accumulate, you can't say it's more than sell but it triggers a higher price, meaning if there is no seller unless I offer 50 cents more. Then there is no seller unless I go 50 cents more. Not me and you, but the millions of people who get up every day to participate in this market. And then boom, it starts. Breaks out. Once it rips, that green line. So I'm looking at this green line in conjunction with this relative strength index. You say, what's the green line? The green line is a fractal pattern. Fractals are never-ending patterns. Fractals are infinitely complex patterns that are self-similar across different scales. This is self-similar. You don't even know what I'm talking about. Nobody on here does. This is self-similar across different scales. Listen, I know you think you're smart. Stop typing and listen. Meaning I can come over here and I can hit 1 hour. And now this 20 is 21 hours. It's fractal across different scales. Price movement. Now watch this, smarty pants. Listen. Does this? What does this look like? That's called the money flow. It's fractal. It's a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again. So you can take this from 1 hour. Let's take it out of 1 hour. Back to a daily. Oh. Self-similar across different scales. Good time to buy a firm. Man, be quiet and listen to the class. Don't worry about a firm. Greedy? Man, you're greedy. Taking over the class. Hey, Gerald, stop your class and talk about my stock. You're in church, sir. Be quiet. I'm trying to give you keys to the kingdom. You want to know about one stupid stock. All right, man. Now that you've ruined the class, we're back to AT&T. Jeez, man, you're so mean, Gerald. You really expect people to listen. That seems so unfair. It seems unfair that they would do that. They should just be able to blurt things out during your class and interrupt you. This green line here, if it's okay with this guy, is the 20-day moving average. Now, he doesn't know what I'm about to tell you, which is it's self-similar across different scales, meaning it's fractal. He doesn't know this. He wants to talk about a firm, but this here is a simple moving average. What a simple moving average does is it takes 20 periods of whatever periods on this stock, on this chart. This is a daily chart, so each of these magic, beautiful little bars that you're too busy to look at most days, these bars show you the open, the high, the low, and the close. And together, they create a pattern. Now, he doesn't know this, but they create a pattern or a stage. And guess what? It's self-similar. And guess what? After you add 1 day, and then 2, and then 3, and then 4, all of a sudden, something magical happens. What is it? It's a fractal, never-ending pattern. 4 patterns, 4 bars could be the start of a new stage, could be a bottom or a top. It only takes 4. When the other indicators line up, we briefly touched on what the RSI is. Now, he doesn't know who created it or what it's about or what it's for. He wants to talk about a stock instead of how to read all stocks. This is on how to read all stocks, where all stocks are going. So when this goes green, that's your signal. It's probably done. It's moved too far in the last 14 days. RSI measures velocity of the price movement of 14-day period. Or if you were on an hourly chart, a 14-hour. If you were on a 5-minute, 14 5-minute bars. It's fractal, right? Across different time scales. Most people read that opening. Fractals, never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over in an ongoing feedback loop. This is a feedback loop, man. This, every day you're getting data. What does a feedback loop mean? What does it mean? These are all part of the feedback loop, man. Every day, something new. Now, look, where did AT&T close? I thought the market was in a correction. I thought you guys said the stock market was going down. That don't look like it's going down, does it? Does that look like it's going down to you? No, that's not going down. It's going up. Where's this been going? up, right? Now we own this, right? Owned it for years. You should have owned it since the day you came into the stock market. Owning this stock is a no-brainer. AT&T, like you got to be not. Hey man, would you like to make money for the rest of your life? You know, there's a company called Verizon. You ever heard of it? You ever heard of Verizon? I know, mysterious stock pick. It's literally on the Dogs of the Dow list every year. This is one of these ones just give you money. They just float up and down, up and down. So as you're watching this, if you know AT&T pays you money, what are you looking for? If I'm watching it and I want to build that and I want to beat compounding, I don't want to just buy it and hold it and sit. No, I want to use the fractal pattern that's never ending, man. Fractals are infinitely complex patterns. So as this pattern rolls through price, what if I could catch stage ones when it's undervalued? Oh shit, now we just added a whole new concept to the money flow. We went from a chart, unless we want to stop and talk about a firm, we could do that. Oh, let me get back to this one. This here would be what? Just from the quick little breakdown we've done, stage 3. You say, how do you know? Well, came from down here, broke out, went up. So when we lay that green line, the green line is giving you these turning points where it says best time for selling, best time for buying. That doesn't mean you buy or sell. It just means these are the ideal times based on whatever. I almost cursed in church. You almost made me curse in church, sir. This is giving you, if you plan to sell, you better do it now. If you plan to buy, you better do it now. That doesn't mean we're necessarily waiting for that and that, because as we see the pattern develop and all 6 indicators trigger, we can make a decision. And all of a sudden we add order to chaos. So if I own this stock and let's say I never want to sell it, okay, when should I buy it? That's what we want to know, right? But maybe I do want to sell it. What side would I want to sell it on? You want to sell it here? No, you want to sell it up here, right? You want to buy down here if all things are possible, right? Well, is there a way to know? And that's where this started to come in for me. Tracking this pattern here. Now, it's not 100%, but here's what I would do. I would begin to run it through what are other people smarter than me. So this is Morningstar. This is one type. There's dozens of these, probably 50 of them in America. You could pay them money, you give them a fucking ticker, and then bam, they tell you what it's worth. So my man that wanted to learn about a firm, you could have just went to Morningstar, typed it in. Let's go. Morningstar. What do you think about a firm? What is that stupid ticker? AF, what is it? You didn't even type in the ticker, man. I'm assuming it's AFRM. Let's see. They say it's trading at a 57% discount. Wow. Here's the problem with that stock. That stock, sir, is a growth stock, and growth stocks are hated right now. So everyone on planet Earth hates your stock. So it's probably not going up anytime soon until the market sentiment. No, now we just added another element, sentiment. You know what sentiment means? If I say, what is the sentiment of the country? It's the sentiment of it, your job. What about in your household? In other words, what's the morale? Let me break it down, make it super simple. What is market sentiment? It means how's everybody feeling? Right now, they're feeling pretty bearish. You say, why? I don't need to know why. I can just look and see. Come over to the chart, man. If we drop this to a weekly on the S&P 500, where each magic bar is 1 week, are we above the green line or below it? We're below it. Well, the money flow says as price, remember it's fractal, 5 minute, 1 hour, 1 day, 1 week, 1 month. If price is below this green line, what does that mean? It's bearish, right? It's moving down. We're below it. We've been below it for 1 week, 2 weeks, 6 straight weeks down. And look at this, still not even extreme. Still not extreme, man. Got extreme over there, right? Now, it's fractal, right? Fractal's never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. The money flow is self-similar across different scales. This right here happens to be a weekly chart. And what happened when the RSI went extreme on the weekly? Price turned around. And what happens when it gets above the green line? Kind of runs up. And what happens when it gets below the green line? It kind of runs down. And when are we expecting it to bounce? See any sign of it, man. We still have room to the downside. Now, that's a bigger picture. That's a weekly chart, right? Well, let's get down to the daily. Same game applies. Now, we've started to build a box now. Here's my anchor point. If you catch my classes during the week, if your brain could possibly even comprehend what I'm saying, I doubt most people even understand what I'm saying. Seriously. A lot of paint huffing. Right here. This is the anchor point to the potential stage change, meaning this is the very bottom of the stage 4 decline. What I am looking for is price to create a box where price stops dropping and it works for at least 4 days. It takes 4 days to call a stage. Now, you could just call it, but I'm just telling you my rules, okay? My rules. My rules. This is my rules. I need it to form a box. And ideally, I need it to be above that 5 day. Now, we've rocketed above the 5 day already. And we got 2 days. Shit, it might decide to build a box up here. But, we'll see. Now, here's the problem. We never really got extreme. Go down to our MACD. I'm just going to assume that some of you know what I'm talking about. This is our momentum indicator, right? The moving average convergence divergence. Say it again. Moving average convergence divergence. MACD. Moving average. You know what a moving average is, right? This right here. This green line is a moving average of 20 days. Why 20? It's a fractal system. What do you mean 20? There's 20 trading days in a month. This measures price market sentiment. So right here, price is now above the average price of the last month and rocketing up. It's breaking out, right? Same thing to the downside. When price closes below it, it's now below the average price of the last month, meaning today's price is below the average of the last month of trading. Sentiment has changed, and now price is negative. Does that mean we need to do something? Not necessarily. Why? Because we're not extreme. Meaning I fully anticipate that it's going to keep doing that. Whatever it's doing now, it's going to keep doing. So if it's broke below it, I assume it's going to keep going down. Now, this is an index. Doesn't play as well as on single stocks. So go back to AT&T. So what I expect it to do is move. When it comes, let's just put this on the breaks above the 20 and below it. These are our break zones, man. Right? And now I'm jumping ahead. There's 5 days in a week. If you have my book, The Money Flow, I talk about the 5-day exponential, not simple. Exponential, not simple. Exponential. Moving average. We need it exponential. It's the trigger. It needs to react quicker. An exponential moving average double weights the current day instead of a back day. So a simple moving, come on, man, stay with me. Stay with me, man. It's not that complicated. If there are 5 days and we took the average price of 5 days, okay, that would be a simple average. 1 day's 52, 1 day's 58, 1 day's 42, 1 day's 39, 1 day's 51. Boom, we have an average. An exponential average, EMA, doesn't use the last day. It doubles the first day. So technically, it's only using 4 days to the past, and the front one counts as 2. It's exponential. It wants to react to newer data rather than wait it out through a simple average. And that'll cause a moving average to turn quicker. That's why the trigger, the red dotted, it's a minor moving average, but it's the trigger. I want it to react to new data faster. And the moment they come together, look right there. These aren't complicated to find, right? Look right there. They're not hard to find. Look right there. And what you see almost always as price rockets above that simple average, which is 20 days of trading, it's signaling to you that, hey, this trend change is underway. And it is why? I don't know. It don't matter. It is. It is what it is. Now, to some people, why could matter. They're like, well, I don't like that reason. Okay. Like it can still go up, even if you don't like the reason. Could be any number of things. Could be a news story. Could be the market change. Could be the wind. The wind on Friday took everything up. What do you mean the wind? Meaning as buying comes in, index funds have to start buying. Shit starts getting bought, even though nobody gives a fuck about that stock. Like that's not even a big stock. And up it goes. The index picks up everything. The wind, the S&P 500 pushes everything. What is that? Market sentiment. So if you say, what about a stock like a firm? Okay. And this is me being real, not just picking on that guy. If you look at, well, we won't pull that. It's going to follow whatever its wind is. So for a gold stock, gold is the wind. For an oil stock, oil's the wind. And you go, what do you mean? Meaning oil's going down. Guess where oil stocks are going? You have learned so much today. So as we look, right, as we start looking, you say, yeah, man, but what about this green line thing? Yep. Now, I'm going to make it a little more confusing. Man, this is layers. This is like an onion that we just keep adding to. This is like an onion, okay? As we keep adding, guess what? Guess what? While price is doing that, it's doing what? Little boxes where price is going sideways. And when you start to go sideways, it may not be a perfect sideways. Maybe it's got a little gangster lean in it. Little lean. You ever see guys driving, they got the window down, they got the car seat back. You drive with a little bit of lean. Sometimes that's how your box does. Got a little lean in it, man. Right? It starts forming up and it kind of just drifts. And the sentiment is negative. Okay? The sentiment's negative. And you can see sometimes it can be hard, man. And I'm like, yeah, it's called fucking skill. You're like, what do you mean? Well, dude, looking at charts, you're going to have to look at a lot of charts, man. So as you're constantly going back, that's what's good, like this or somebody else. Somebody else's charts look different, gives you a different perspective. What I'm looking at is I look at this. So if I go back and look, I mean, what are we looking at? Just in this box. What do we know to have a box? Meaning I'm always watching what? The price. So I'm looking for these little boxes to form. Now, when they're all over the place, that doesn't mean that much to me. I mean, I'm not trying to make sense of something that doesn't make sense. I'm looking for it to make sense, right? Meaning I'm looking for a pattern to be clear. If I'm staring at it and I go, I don't see it. Well, then fuck it. Don't do it. Like if you're a trader and you're like, well, is this a breakout? It should be pretty obvious, right? That is a breakout. Pretty obvious. 5-day. Breaking above the 20, 10-day, breaking above the 20, 20, starting to turn up, price rocketing up. That's not a confusion, right? And so as we watch this, you're like, wow, that is actually a breakout. Now you could be like, well, is it exactly above the high of the premium? Like you could do that, or you could say, yeah, that's what a breakout looks like, right? And sometimes our boxes, look at this, man. Dude, even this shit, as you look at this a lot, this is not the best teaching chart on this, but as you look at this a lot and you start to see this kind of shit on these indicators and these moving averages are going sideways, you know, your 20s and your stuff start going sideways, this is where you get whipsawed. So as I start seeing all this shit compressing like this, I don't trust my indicators anymore. Now what I'm looking at exclusively is what is price doing? Is it ripping? No. Well, it's fucking, then it's consolidating and it's probably just fixing to bounce back and forth. So slightly above the 20-day doesn't do anything to me. Slightly below it, I'm not real. That doesn't do anything. That's not a breakout, right? And I call these in my course gray areas where everything gets kind of mushy. The MACDs, the indicators start to go flat, and you're like, what is that? Well, that's consolidating, and price could do that for a long time. And then what happens? You'll get these little fake, see it kind of start to roll up and then back down, and then roll up and then back down, right? Well, look at these days. Just look at the characteristics of the days. They're short, little open, barely goes up, little close. Like, these aren't big days compared to this day. Now, that's just the characteristic of the candle. This is a big move. It moved. Now, you could say, well, how much volume? Look, all right. I'm just saying this is what they look like on these breakouts, man. And look at this one. A lot of times when it's legit, you get a big, nice, healthy candle of it moving. So that there, I don't know what you would call that, health of the candle, ties into things like the little thing like market sentiment. Where is the S&P right now? Where are all those things at right now? This Exxon does not want to go down. So let's back this up for a second. I don't want to get lost on Exxon, but I do want to. It's not the best teaching chart. But this will make it look a little clearer. Now, if you traded for a minute and looked at some charts for a minute, what are you seeing? You see that seesawing effect that's happening with the moving average here as it comes together? You see that? And you're getting these clear pivot points. All right, we can move this down a little bit if we wanted. Probably should have took it down into there. And as these have formed, now the more of these form, the more of these you can project, is what I'm trying to say. So what are we seeing? So as we look at that, what are we seeing? This is just a big ass stage 3, man. And what if you see price, it'll drift above the 20, below the 20, above the 20, below the 20, but it's just building out this big stage 3. When this thing decides to go either up or down, it ain't going to be some little candle bouncing back and forth in there, right? It's going to rip, man. It's going to rip. That's what we're going to see. But right now, although it is on the upper side of it, isn't it? But look, you see the pattern developing. They're getting real tiny. Look at the TSI. And I don't talk a lot about the TSI because this is fucking next level Illuminati knowledge that I can't share with you guys. But the true strength index, I think I'm one of the few humans that uses it. You see what it's doing there? Like the indicator's dead, man. See it? So this is a giant stage 3. Now, are the stocks undervalued? Now we could go look at these other, remember we talked about fundamental analysis a little while ago. A 3 can become a 1. You're like, wait, what do you mean? Meaning the longer this goes sideways, it works off all that momentum. It worked off all that sentiment. It brings it down a little bit. Everything, the oscillators get worked down. It's digested. The move is digested. And the longer this move is digested, that 3 can become another stage 2 breakout, and off we go. A whole nother leg of oil stocks pushing higher. You don't think that's possible? Shit. I guarantee it's possible. There's plenty of room for this thing to run up into here, man. So what would that be? Now, as an investor, do I want to be buying a lot of oil here? It feels high to me as an investor. Now, this is where the trader-investor sentiment can be different than each other because you're wearing a different hat. And you're like, what do you mean? You may be like, well, what do you think about buying some Exxon? I'm like, man, I don't know. It feels fairly valued to me. Feels like true value. Someone mentioned it in the comments. Now, I'm trying to make the case of this stage 3 becoming a breakout. Now, as an investor, yeah, I don't want none of that. As a trader, I might want some of that. And you're like, what do you mean? Meaning, I'm a swing trading. All of a sudden, my investor hat comes off over in my trading account. I'm like, all right, we're doing what? Same thing, money flow, but we're approaching it different. An investor, I don't want to invest in stage threes. I'm trying to buy shit on sale, man. As a trader, that's different. I might want to trade this. This is good for $5, $6 pop, man. Let's go. The momentum's to the upside. Like, people like this oil. All we need is Vladimir Putin to tweet one thing. This shit goes another $20, right? That's a trader. Difference, right? Same money flow, right? Same money flow. You could take the money flow from me, learn everything I know, and destroy my returns. You're like, what do you mean? You're watching different stocks than me. You're better at it. You're a better stock picker. You know more about penny stocks that are about to rip. Like, you spend hours a day searching them. It's not this. It's when you what you've done is you make order out of the chaos of that activity. So if I was going to flip shoes, I need to know the order. Okay, like you start to break it down. If I'm going to fix a porch, I need to look at the parts and take it apart in reverse. If I want to make money in a trade, I want to make money. I want to see the pattern, right? Let's see. Didn't GameStop rip? Oh. Uh-oh. Does GameStop do the money flow at all? Let's see. Let's see if we were going to... I don't trade this stock. I probably should. Let's put the RSI on, just the recent extremes, and let's see what we got going on. This is how you say, Any way we could identify that as a stage one, that's stage two breakout. Trade went bad, came down. There's our stage one buy again. Oh, look at that big move there. There's your breakout, right? So yeah, it's following the money flow, man. Runs up. We know what to do here, right? What does that say? RSI says what? Relative Strength Index. Prices move too far, too fast. Take some off. And then what? We need 4 days, right? 1 day, 2 day, 3 day, 4 day. There's your stage three box, right? So we got 1, 2, there's 3. Come on, Gerald. Do you mean GameStop might follow the money flow? It might. So what does this say? Best time to sell. Now, if you're an investor, you don't need to sell. That don't even mean you're investing. You just hold it, right? That part's easy. Being an investor is easy. You can kill it on this because you're never selling. So you're never losing. You're just buying. Right? And then if you're getting dividends, you're just getting money all the time. Like, this is no brainer when it comes to, if you're going to own 30, 40, 50 stocks and run the money flow over them, think on this. You're running it. Now pretend this pays a dividend. You're only buying when the RSI is extreme, man. And you're just doing that all the time in your portfolio, just buying the low. And when it runs up and does this, what are you doing? Trimming a little. What? To add to one that went down. Because they're not all going down at the same time, right? Right now, we got Campbell's running. What? Kellogg's ran. What else? Lockheed Martin ran. Exxon, Conoco, MO. There's like shit tons of stocks that ran, right? And then there's some that went down. And so as we watch, when I'm watching it as an investor, I'm watching this pattern. So when do I want to be? But we're back to GameStop. If I want to trade this to the upside, when do I want to buy? I want to try to catch, if at all possible, what I think is the bottom or stage one, or listen, even the kids in the back, all the weed smokers in the back, the breakout. Breakout's your last chance. So if you buy the breakout, any day past that is you're at risk, man. Every day that a trade is working, you're at risk of losing money. Every day that you enter a trade and when I say a trade, meaning this is a trade. You enter it, you have a potential stop loss, you have a target set. Otherwise, you don't have a trade. What you have is chaos. If when you enter, you don't have a stop and a target, you're not trading, right? That's trading. That means it either goes my way or I want out. That's trading. That's not investing. It's definitely not position trading. And what do you mean? Well, on those games, I'm using this. Okay. I'm not selling ones. I'm selling threes. You go, what if it goes down? I'm not selling down. I'm selling threes. And then I'm working toward what? True value. So once the stock is true value, well, this position trade, that's wrapping up, right? We would have made our money. But if it's below, then I'm going to stay with it. And that's position trading. You're trading around the position or value of something. And you might wait it. So I don't have to get out of Exxon, but I would start downsizing it if I was position trading. If I'm an investor, I take it down to the size that I want for my dividend, and that's it. And I leave it be. And the next time we add will be a stage one when, for whatever reason, those stocks come down again. So if I'm watching GameStop and I'm trying to buy the bottom, do I worry about what the other day's price movement was? No, that has nothing to do with this. You're like, yeah, but it moved a lot yesterday. Well, it moved a lot there and then moved a whole lot fucking more up there. So that and that don't have anything to do with each other. Meaning you're like, oh, I missed this day. Well, you weren't supposed to buy that day. Not if you follow the money flow. How would you have known to buy that day? You're omnipresent, like you're like God or something. You knew that was the. Now you could have took a shot at that, right? You could trade like that, and if you get good at the stages, I mean, maybe you get pretty good at catching them. And this would have been a logical one though. Why? Because one of the principles we haven't even covered that the money flow price stops where it stopped before. That's how you get support and resistance. That's how you get these zones. That's how you get boxes. You're like, what do you mean? Well, if prices stopped there before, it tends to stop there again, and that's how you build out these. These are boxes. And we need at least 4 days to be a box, right? There was the pivot point, and then what? 4 days. There's our anchor or pivot, and you got what? 1 day, 2 day. So we don't have 4 days here. Now, if you've heard me teach much on this, you can borrow a day. If it stopped right at support, I'll borrow days. So I would be fine getting along this. You have a definable out. The problem is it's an $18 stop loss. Yeah, but sometimes it comes back. No shit. That's why we have stops. Let's see. Turn off comments on there. If you're on Instagram, man, during the week I'm doing covering the market and some stocks on Instagram, but I'm doing it behind that subscription wall because the bots just get stupid, man. I'm going to keep Sundays on here, but the rest of the week I'm going to do behind that. Because the comments just get too stupid to comprehend. You can turn them off, but I do like to interact with people too. Just FYI. So we see the pattern in GameStop right here. This is the beginning of a stage one. It's too soon. We got our pivot point. We got our thing. So now we're trying to build out the box, the sideways movement. Now those boxes can fail you. Here's a box being built out. See it? Moving averages are coming together. Right? You had your leg down. So I don't want to give the impression these things are perfect. And remember, I talked about a stage 3 can become a 1. Well, fucking stage 1 can become a new stage 4, which then goes into a new stage 1, which then breaks out, didn't go very far, stage 3, comes back down, stage 1, breaks out into a stage 2. There's your stage. You see what I'm saying? Like this game is playing out, man. And then what? Stage 4 decline. Now what? Stage 1 forming. This game's playing, man. People say, well, I don't know about that. Well, I'm just showing you. Like, that's the pattern, man. That's how prices move. Sometimes they do it picture perfect, and sometimes not so picture perfect. And whenever I see those, I'm like, they're not money flowing, And there's other little, we talked a little bit about market sentiment. That's the big picture. Where's the S&P? I get a lot of people want to talk about growth stocks. Guys, it don't matter. None of them are going to go up until the sentiment in growth stocks changes and nobody wants to buy them. So it doesn't matter. They're going to they could be in a bear market for a year, 2 years, man. So, the market there's plenty of stocks going up that are not growth stocks. I mean, look at Campbell's. This is a breakout, man. And you can't make a stock do something. You can only work with what is happening. That's a breakout, right? That's a breakout. And, we see price got extreme and then stopped. Looks like it wants to keep going. Took some off, but now what? I'm just letting it run, man. Now, what's this stock worth? Well, I thought it was worth like $50. So let's see. What does Morningstar say? Campbell's Soup. They're going to say it's fairly valued. Campbell's is trading in a range we feel fairly valued. So now we got to ask ourselves, are stocks like Campbell's? What else? What's a stock like Campbell's? Kellogg's. That's one we were buying last year. Buying hold, or I was. That's extreme price too, right? It's building a box. Just as a teaching here, just as a pattern spot. Do you see the money flow here? Just looking real quick. Can you see it? When you look backwards, it should be easier to see it, right? You see it. Come on, right? And then you could say this kind of money flow. It did, and then what? Came over, and then what? Just ripped back out, right? But you can see the pattern of price movement, and then topping out. Now, going back, you're like, yeah, but you're going backwards. I know. You want to go backwards so that you can begin to see it going forward. So you want to almost be anticipatory without necessarily reacting to it, but by seeing it, and based on that, do I want to buy up here? No. Now, when would I like to take gains or profits? When other people are being greedy. So greedy is defined as something selling for more than it's worth, right? Right. So if I've bought some of these, this is probably a good time to trim some. So I'm guessing Kellogg's is also trading fair value. Maybe not. Maybe they say it's no. They say it's worth 17% discount. That may change our perspective here. Maybe we don't want to take that much off. Maybe we don't want to take any off. Maybe you're like, nah, I'm good, man. I know the RSI is high. I know it's probably going to stay here. I know it's going to pull back. I don't want to add, but I'm not putting any on. When do I want to add? When I think it's a stage one, which means what? I've got an anchor point, and then I got at least 3 days where it starts moving sideways. That is it, right? It's exactly what we've been talking about. Anchor point, price move sideways. You might say, well, you're cherry picking charts. No, I just randomly grabbed this one. And that's exactly what we do if we own it, man. If we own it. Fascinating, right? So as you watch charts, now you say, how's that going to help me trade? Well, shit, if you own this stock, you could trade it too. Meaning over in your trading account, you get long, you buy the breakout. These kind of things. Like you don't have, there's a whole world of stocks. So we want to own different things in different sectors for sure, man. Utilities are one of my favorites. UTSL is one of my favorite trades setting up, right? Here's our anchor point. This is going to be on the list this week. I was letting it set up. It kept falling below the 5 is why I haven't executed on it yet. Now what? Price is above the 5. Clearly got 4 days, right? The momentum's to what? Upside. Stochastic's coming out. TSI is what? Coming together. Has price ever been here before? Yeah, it stopped there before. Is it visually making the pattern? I mean, look at it, guys. It looks like that, right? Just from a big picture. Let me get rid of this guy. Sorry, delete a comment. So, what is the UTSL? This is a trading tool. I like to swing trade this. I like to position trade it. The cool thing is it's utility stocks, pretty low risk, but it's 3x. So the stocks inside of this would be stocks like Southern Electric. You notice it's trading. Look at the difference. Look at the difference between Southern and the XLU, which is the unleveraged. This is the XLU. So this holds the top 20 utility stocks in America. Does this have breakouts? Yeah. So as an investor, I would buy the ETF or the stocks, right? And I want to buy stage ones, obviously, right? And you're like, what do you mean? Like I want to buy down and on this side of the green line if possible, right? I mean, I think anybody's watched me knows what I teach, which is what's happening here, right? And so as I'm interpreting this pattern, but in order for me to be a buyer, right, one of two things. Fundamentally, I think they're undervalued, or I'm just purely trading on technicals, and that would be fine, which means, you're going to have a stop somewhere in here, and where's your target? Somewhere up in here. That's a swing trade, man. You got a what? You got an exit, you got an entry, and you got a target. And what am I waiting for? If I'm buying the stage one, it would have been Friday. I'm waiting for it to get above that 5-day, and we have a solid box here. And that's what I'm playing on, that this holds, and that this pattern, it takes its natural course, which is it then moves higher, breaks out. Does that happen? Fuck, I don't know. But that's the pattern, that's the setup. That was the setup here, right? That's the setup here. That's the setup over here. That's the same setup, man, even here, right? The price comes in, starts to go sideways. Now, you saw it happen right here and didn't work, right? Did you catch that? Came down. It basically held it again. So there's no, I wouldn't even be stopped out on that. It still held this box. And when you look over, it had support there too. See that? So as you start deeper diving each of the six, so there's 6 basic parts to the money flow, but then inside of each part of, you could do fucking hours of video on support and resistance, drawing the lines, drawing the boxes. Like you could go deeper. Let's drop down to a 1 hour. Do we see some support on the 1 hour that we don't see on the daily? So if I'm trading, purely trading, I really, really need to know that, man. Because then I know if a trade is moving against me, right? So I need to be able to see the fractal nature of price. So if, let's say I'm ready to trade this as a momentum swing trader, I'm going to watch the daily and go, okay, I'm trading the pattern. What I'm looking for, I may start nibbling on the stage one. I'm nibbling. And then if the trade starts to go my way, I've already got a little profit and I'm going to buy the breakout, right? If I'm nibbling, this is on the XLU. So let me drop this to a 1 hour and let's see if we can't get a jump on this, man. So what do we see on the 1 hour though? I mean, be honest. When you look at this, I mean, it just looks like a big box, right? We can probably bring it in a little bit. But you can see where it's been here for a minute, man. But if it gets above, I like it because at the same time, you're playing the bottom of the box, man. So yeah, so on the 1 hour too, you can make some tighter targets. You're like, what do you mean? Remember previous highs, previous boxes, previous highs become our targets on the way up, same as on the way down. So now if I'm trading, look, it held the box, the bigger box. Let's move up. It's above the 5. Still inside of this box, inside of a box, right? Remember, fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. So when you're on a daily chart, and we want to dig into what we're seeing going down right here, well, we can see it. We got an anchor point, right? We got an anchor point. And from the anchor point, we draw a line that gives us our support. It was confirmed and held twice. And now price is above the 5. That is an alert. Stage 1 confirmed. It's confirming this, that it's probably done dropping. This is stage 1 with a stoppable pattern. Like you could put a stop over here. if it breaks that, we got to assume this one became a new, that one is not it's now a new stage 4 decline is underway. But what we're expecting is a breakout to the upside, and then the target is what? Previous high. So as I follow the money flow, as if I'm a trader, then yeah, I might want to drop down. The pattern is fractal. Go to the 1 hour, pull it up, and what are we looking for? We're looking for the boxes inside the boxes, man. And you see this little right here? Remember that 73.50? You could almost see a box form 1 day, 2 day, 3 day, 4 day. But on day 5, it immediately came down. But it was a tiny box forming, right? But remember what I talk about when the moving averages are so far apart. And look, also, we weren't on an extreme. Moving averages that far apart, we're not on extreme. This box is totally suspect. But we're drawing it out, but we're not buying that. That's not viable. Down we start coming. Now what? Our size still not extreme. But now the difference is this box has been tested and we're moving sideways. So this one becomes viable. And we can see the moving averages going together. And what do we see? The momentum changing, right? We're seeing this come together. It's still early. This is like day 1 confirmation. But it's definitely tradable. Man, if you wanted to trade it tight too, this is what I would have been doing. I'm having my stop right there. It's 69.50 range. But if we go down to the 1 hour, remember it's fractal. We drop down to a 1 hour. Where's that 69? Yeah, right there. So when we get down here, we get a better visual of where that stop is, which is right there on that low, which is going to tell us this level's broken, right? This support level's not holding. But if it holds, we assume it holds. And then what? Price turns up and goes where? To the previous high and the next one. So notice on this 1 hour chart, this zone right here, that actually becomes a box, right? And part of a leg. Stage 4 decline, went into stage 1. Stage 1 didn't hold, turned into another, right? Stage 4 decline. So what we're seeing, the 3, down it goes, starts to put in a 1, down it goes, starts to put in a 1, right? Stair stepping down. Sometimes we get that stair stepping up. You're like, what do you mean? Look at Exxon, right? Starts to come down, boom, takes back off. Starts to come down, boom, takes back off. Just keeps stair stepping higher. That's not the best chart in the world. Where's one? Here's another one. Runs up, starts to come down, bam, steps back up. It just never goes into that stage 4 decline. Well, you can get the opposite, which sucks. You can get the opposite the other way. And again, this is a 1 hour chart, so it's fractal. On a 1 hour chart, when am I looking for price to start turning? Right? I'm reading it the same, man. It's fractal. When the RSI is extreme, I'm looking for price to start to turn. And those are the days that I'm marking with an anchor point, right? I want to see these days hold. And it held up twice there. So that tells me that area is tradable. I mean, if I'm trading. So that's how I'm looking at it. If I start breaking it down, man, if I'm purely swing trading or short-term trading, you got to start taking your time down a little bit to catch the breakouts and the moves. You're not going to be able to do that on 50 fucking stocks, man. So you're going to have whatever you're trading, whatever you're watching. Most people doing a lot of that are going to have their go-to. I mean, for me, that's what I used to do. I didn't run a lot of filters. I had go-to stocks. Maybe you like filters. I don't know. Man, that is all I got today. Look at this AT&T chart if you need to get a little practice in. If you need to be able to practice spotting obvious boxes, that's an obvious box. There's an obvious box. There's an obvious box. There's a bunch of them, right? obvious top and box. And as you can practice seeing these, you're going to start to see them on other charts too. Let's look at God damn, what's wrong with my hand? Oof, look at a firm. Big 31% pop. Pow. There's your anchor point. Momentum's turned. Yeah, it's a buy, man. That would be a stage 1 buy on that Affirm, my man. 1, 2, 3. We don't have 4 candles, but man, it got above that 5. I wouldn't be surprised to see it come back down though on Monday. Get a little weakness, I'd get on it. Let me show you one we talked about in Discord as a swing trade and as an investment. Swing trade, I was talking about keep an eye on Intel. This is a low risk swing trade, but Google is back in the box. This is something we didn't talk about today, but it's the concept of it starts to build a box, breaks it, and then comes back. This was the anchor point that I'm referring to. It started building out a box. It was it wasn't the best of boxes just because of how far away everything is. But once it did that and came back, I mean, that basically builds this out now. So we've got the momentum turned. We got a flat. I mean, everything is saying, the way I'm interpreting this coming out, you got a MACD crossover. These crossovers are pretty weak. They're not with much momentum. So what I'm thinking is this is now building out this stage 1. Like Google's probably taking a stand here. And if we were to look, do we think what's the value on Google? Speak. Morningstar, who's typically pretty conservative, have a 35% discount. I'm gonna say TipRank says higher. So this is a low risk trade other than it's expensive. Maybe your broker allows partial purchasing. And it's also a good investment spot. So it's kind of a trade and an investment spot. Just decide what you're doing with it, make your decision. But I mean, we could easily see the market come rally back to the 200 and then continue down again. You get rallies in bear markets. And so if you're a trader, you need to take advantage of those rallies. And if you're an investor, stick to your strategy of buying lows. And if you're doing a little of both and you're swing trading, then you're going to have targets like in here and then, back up into here. So if I'm trading it, I know it's probably going to stop here. Why? Look, it stopped there a bunch of times. Probably going to have the same problem. And then it stopped here before. So we got everything we need. We got a stage 1. We got targets. We got a place for a stop. This is fucking trading, man. That's trading. And so let's drop to a 1 hour, man. This is trading. And if we go to a 1 hour, now you can do all that on a daily, but let's say we went to a 1 hour because we were stalking it. And, you see the breakout day. Didn't rip though. Started coming back during the close, but it still held the breakout pattern that we're looking for, right? The only thing but you can see this box now, right? See it? You can see the box in deeper, fuller. So this is a 1 hour chart showing you the box being broke right in here. And then it coming back into the box. And you've heard me teach this. This is, oh man, this is beautiful. So look at this on a daily. I was about to get off, man. And then this is, remember, back in the box. It started forming a box. Now, this isn't the best box because of the moving average alignment, but let's go with it. It's forming the box. And then look, it breaks it. And it's like, fuck. And then look, right back in. So on here to here, that's just 2 candles, right? But we get down in the 1 hour, man. Get down in the dirty. And we can see it visually, the box being broke. Let's put our line on there. And then coming back in. And you see it. Market opens. Hangs out a minute. Starts to move. And then boom. We're back in the box. We're back in the box, right? That's nice. Nice. There's a science to getting rich. It's an exact science like algebra or arithmetic. There are certain laws that govern the process of acquiring riches, and once those laws are learned and obeyed by any man or woman, he or she will get rich with mathematical certainty. The ownership of money and property comes as a result of doing things in a certain way. Those who do things in a certain way, whether on purpose or accidentally, get rich, while those who do not do things in a certain way, no matter how hard they work or how able they are, remain poor. It is a natural law that like causes always produce like effects. And therefore, any man or woman who learns to do these things in a certain way will infallibly get rich. And that is the above statement is true. That's from chapter 2 of the ebook, The Science of Getting Rich. It's available free on the internet. I even have free links on my stuff, man. Appreciate you guys. Thanks for listening.